Good morning. Happy Monday, the 14th of September. I'm Jessica Amir, market analyst with Bell Direct. Well, a very busy week is on the cards for markets with the RBA, the US Fed, the Bank of England and Japan to all be cast in the spotlight as they shed some further light on the state of each of their economies and potential further stimulus as they release their central bank meeting minutes. But today it looks like the Aussie market is shaping up for a quiet start to the week. The futures were earlier suggesting a lift of just 0.1% after Wall Street wrapped up its Friday session on a mixed note. On Wall Street we saw economic cyclical stocks like retailers and industrials shine, with Nike up about 3% and Caterpillar following. Now this helped the blue chip Dow Jones lift just 0.5%. However, we did see selling in US tech stocks return, which is why the broad S&P 500 managed to just hang on to a 0.1% lift, while the Nasdaq went the other way, losing 0.6%, with the tech sell down continuing. Apple lost 1.3%, Amazon down 1.9%, Facebook, Alphabet, which is the Google parent, as well as Microsoft, also retreated. On the commodity side of things, oil is trading steady at $37.33 US. Gold is about $7 less compared to where it was on Friday. It's now trading at 1,948 US, and the Aussie dollar is at 72.82 US, almost holding a weekly high. Now, what to watch today? Well, Macquarie MQG announced quite an ambiguous market announcement, saying that their first half of this financial year, that their result will be 35% down compared to the same time last year. And their result will also be 25% less than the second half of 2020. Now, what this implies is that their profit is going to be considerably less. What is interesting to note, though, is this drop in profit is not as bad as what we saw in the big four banks. That could explain why the pre-market orders for MQG is suggesting that MQG's shares could rally at the open. Elsewhere, Breville, BRG, Quora, CNU, Hub24, HUB and SFR and SGR all go ex-dividend today, transferring the dividend right to shareholders. So if you're thinking about buying these shares, it might be worthwhile taking a look at them today, because shares usually trade lower on ex-dividend dates. Elsewhere, on the economic side of things, later this week, new home sales data out on Wednesday. Thursday, employment data numbers are out, with the brunt of lockdowns expect to show the full force of the wake on unemployment, which is tipped to drop or worsen from 7.5 to 10% in August. So keep an eye on that. Looking at trading ideas, it may be worth a look at aerial imaging company Nearmap NEA. It had its buy rating upgraded by Citi with a new $3.15 target. Citi says patience is required as the business navigates this weak economic environment, but keep in mind that it's just raised some capital, so that should remove the balance sheet concern and provide ample capacity to fund future growth, including potential M&A activity. So that's NEA, a Citi buy. Elsewhere, AMA had its buy rating upgraded by Bell Potter, increasing its target by 13% to 85 cents. Now that implies 25% upside from Friday's close of 63 cents. Bell Potter says AMA is looking attractive as we've got new COVID-19 cases decreasing in Victoria, and a path to ease restrictions is now in force in that state. Plus, the business could potentially sell its parts and services business in the next 3 to 6 months, which would help reduce AMA's debt and alleviate the need for a capital raising. Elsewhere, Sandfire Resources, OKU, Adriatic Metals, ADT and Champion Iron, CIA may be worth a look, as Trading Central's data is telling us that their shares are giving off strong bullish signals, indicating their shares may rise from Friday's close. I'm Jessica Amir, market analyst with Bell Direct. Stay safe, happy trading.